The US exchange traded funds ETF market achieved a historical milestone in 2024, with net inflows surpassing $1 trillion, setting a new annual record. This surge highlights investor confidence and growing interest across the diverse asset classes, ranging from the fixed income products to speculative leverage investments. Globally, ETFs attracted over $1.5 trillion, with regions like Asia and Europe also experiencing unprecedented inflows. If you're new here, welcome to Daytopia Wealth and Research, where we transform your everyday news into financial opportunities. My name is Dr. Osunye Yusuf. I'm a financial expert and chartered accountant for over a decade. Kindly subscribe and follow our page to stay updated. Now let's go into the market updates. Well, November was a standout month, driven by optimism over the President-elect Donald Trump's proposed tax cuts. The S&P 500 reached its highest level in the year, while ETF recorded a monthly inflow of $155 billion, averaging $7.3 billion daily. Equity funds were the primary drivers, with inflows doubling October's figures. Fixed income ETFs extended their record streak, marking the 34th consecutive month of positive inflows. This year, we also witnessed significant ETF innovation, including actively managed funds and those leveraging derivatives for higher returns. Notably, the launch of cryptocurrency ETFs holding Bitcoin directly attracted remarkable demand. Dominant players like BlackRock, Vanguard Group, and State Street Corp captured 60% of inflow. Go into the financial opportunities. If you've been following this page, by now you know what ETFs really mean. The first financial opportunity is that significant inflows into equity ETFs spurred by the bullish market sentiment and policy optimism, which we know as the Trump bomb, present a robust opportunity for investors. Now, these funds offer access to a diverse portfolio of stocks, providing exposure to growth in sectors benefiting from the anticipated tax reforms and economic policies. For investors looking to capitalize on market rallies, equity ETFs combine the potential for higher returns with liquidity and cost efficiency. The second one is the fixed income ETFs, which are a safe choice for those that prefer steady returns and lower risk. These funds focus on investments like government bonds and corporate debt, which provide reliable income even when the market is uncertain. Their consistent popularity shows they are trusted options for long-term stability and balanced portfolios. And the third one is the cryptocurrency ETF, which is a new one. The Bitcoin-focused ETFs are making it easier for traditional investors to access the growing cryptocurrency market without directly buying digital funds. These ETFs are regulated, making them safer and simpler to invest in. As more people trust cryptocurrencies, these funds offer an exciting way to diversify and explore a high-growth sector. In summary, the ETF market is thriving, fueled by innovation, optimism, and diverse opportunities. Staying informed and being proactive can help investors leverage these trends and adapt to the ever-evolving financial landscape. Thank you very much for joining us today, and see you next week.